doing today. And today is the 7th of June, and it's a day with all the bad data going on. First off, Raytheon, they're to Washington from Massachusetts, like the other major companies like Lockheed and stuff like that, to Virginia, Arlington area, which is smart because it makes them closer to everything. But on the real estate stuff, commercial property is starting to slow down because they raised a lot of basically, according to national. So this is Wall Street Journal. Commercial property sales slows, rates, rising interest rates are sinking deals. But properties though really haven't got hit too bad yet. They're starting to. Sales of other types of property, such as retail and apartments, was in April, but analysts, brokers see activity maybe now slowing in these sectors too, as rising interest rates keep some making competitive offers. In other words, it's been trying to scam forever, so now they're not going to be able to do it anymore. And more power to them because they're trying to do it. And basically, people trying to build buildings and warehouses and stuff like that, or adult family living situations, communities and stuff like that. And a lot of them are not going to get the rates that they want, so so they're not going to make their money back. So they bagged on it. Like warns global economy may suffer 70 still stagflation, like it did in the 70s when I was a kid. I remember this is Yahoo News. World Bank / global growth forecast 2.9%. Words of stagflation. It was like we're talking anywhere from 15 to 20, and then just a lot of it just depends. So we're heading that way again. Also, too, gas prices went up 5 cents. Crude did. Basically, it's a West Texas crude, the Bering Strait, that kind of thing, and so basically, it's just one of those issues where a lot of it has to do with a lot of the global problems that are going on, and a lot of it has to do with just local problems too, basically going on in the United States, not being handled. I mean, Janet Yellen, Secretary Treasurer Yellen, now sees levels of inflation. Well, they caused the problem because they let so much money them, so they got to raise rates. And she's trying to blame it on hedge funds, but it's not the hedge funds' fault. It's the administration, because they started it, and it started with Trump, and now it's gone into Biden. And Biden's really did it because he can't pass all the problem. They knew it wasn't going to happen. Commentary not very more to be done on gases, that's a bunch of crock. Because if they would have followed Trump's policies, they wouldn't have now. And basically, when the first action Biden did in office, pipelines, XL pipeline, a bunch of other pipelines, basically they were going to try to sell some leases and all this other stuff, and they just took it off auction. So, basically they're trying to pass the buck the other way, trying to blame the Russian invasion of Ukraine, which is also causing food price stuff. But also, too, you got to remember in China, there's also the issues there, too, because they closed down Shanghai, which is starting to reopen a little bit. But the problem with this is all on Drudge Report. And I've seen this on other stuff. Basically, a bunch of other stuff, Bloomberg, Wall Street Journal, CNN money, MSNBC money, Fox Business. So a lot of the stuff is basically, this is just public knowledge. It's already out there. Just basic reports are all on Drudge. So basically what you're seeing is just a bunch of stuff coming together, which are basically trying to hit all at the same time. And that's and you can't blame Ukraine for all that, because Putin was essentially drawn into that. So, and, basically that is a lot of the fertilizer, a lot of farmers can't get what they want because the pricing is going up. They have to try to get it to other countries, but the production ramp up hasn't been there. Converting it to clean, there's only so many production facilities in the United States. Time for a ramp. Gas reserves to use, and there are not many. I mean, they're using it, but we're 1 million barrels. 1 barrels a day is nothing. It's just not much because it's all coming out of basically the underground reserve salt flats, basically in Louisiana and Texas. So a lot of the stuff that's going on is kind of a joke. Um, and so a lot of these fires that are happening right now, it's just it's tough to quantify because you got a lot of stuff going on all at the same time. And like I said, this all affects real estate pressures and base rates anyways, because it's going to go up here soon this month or next month. They're going to raise it another half point to a point. They should raise another point right out of the gate. They also raise another half point. Probably going to raise it 2.5 points. And it'll slow things down, but it'll make it better for the housing market, even though sellers aren't going to get what they want at all. But it'll make it better for buyers to start loosening things up. But the thing, Article 2 on about a debt bomb that was in Axios. And so they were talking about a giant 2 that has potential. I've been talking about this for a while since I've been doing podcasts. And so you have to look at all these different factors and look at all these different things that are going on. And so all this stuff kind of plays into, a bunch of different areas, that kind of stuff. So anyways, these are just things to think about, when you're looking as an investor, buyer, and as a real estate agent or mortgage broker, you need to look at this stuff too. I mean, you work at a title company, really, you're up and down. It has to do with the market, but there's always going to be a market. Mortgage broker, you're going to have to learn how to change and adapt. You're going to have to learn commercial mortgages and just in doing the basically retail homeowner mortgages you've been doing for a while. And agents, they have to adjust too because they've been feeding off that mortgage brokers and real estate agents or whatever, but those days are coming in too. So a lot of things are going to change here in a big way. The problem is the big multi-trillion-dollar bond debt that basically goes unpaid and it blows up. And a lot of the mortgages right now are looking, almost 10% of all mortgages now are basically prime or non-prime, non-conforming type of stuff. Alt-A is kind of a mixed bag because it depends. So because a lot of the government, a lot of the loans are government backed, 20% of the losses for the banks, so because they don't get railed again. But it's still, it's still an issue. But as an investor or buyer, there's opportunities, and as the rates go up, there are going to be more opportunities. So I would just be patient, even higher rate. So what? Most real estate agents have been working right now in the last 10, 11 years. You've been getting over because rates have been so low, but those days are coming to an end. And rates go back to where like in 95, 94, 96, where they were 7.5, 8, 8.5, 8.75%. 80-20 loans started at 9 to 12%, and then one of the seconds going up to anywhere from 12 to 16, 17, 18% second, and that's including your taxes, or you can pay your taxes outside of it. Most of them are already included now. So on these days they are, but before they weren't. But so you can have a lot of problems, that are going to cascade up, and that's just the way it goes. But there's going to be people with cash who are going to be able to make some money. So I would say is conserve your cash and wait. If you're an investor or buyer, just wait because the opportunities are going to get better for you. And as the rates go up, because they got to take a lot of the stuff out of the system because it's just getting bad. And even though the Russians are going in to Donbass region and they sent in another 3-4 brigades in there, they only had 20% of the country, but they took the most important parts. So they took a lot of the stuff where there's gas, oil reserves, and stations. Also, too, a lot of where the fertilizer areas are because they've blown some of those out. So it affects the world's food supply too. In addition to the gas prices keep going up, and that's really going to crunch the economy. If it goes up a couple more dollars, things are going to come to a grinding halt, and it's going to get real bad. And like I said, there's a lot of these economists have been talking about it, and you can read it. It's online everywhere. You can see it. You can look at a lot of the business blogs and mainstream articles that are coming out in mainstream papers, and and different areas. So a lot of this information is out there. You just have to go out and find it. And so, I mean, I was kind of tripping out with the stuff that was on Drudge Report today because a lot of it was just boom, 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 and then some stuff on Fox, CNN, MSNBC, all kind of said the same thing. So, there's like this big giant boom that's going to happen like 2008, probably be worse. But anyways, just you got to start looking at more opportunities as buyers, sellers. Stuff's going to drop, but you'll still be able to sell your properties, but you're going to get a lot less than you. So instead of getting 600,000, you may only get 450, 485, and maybe less. And that's just kind of how it's going to go. So it's going to cut into your equity stream if you wanted to sell. But the thing is, the one advantage to it is that you'll be able to buy another property, and if you want the same area or whatever, suburb or city or country or whatever, so you'll be able to get another property, which people haven't really been doing. A lot of people selling and go to rent or out of the state. So, and also too, places like the West Coast and East Coast, and every time that interest up a point and a half, 2 points, more and more properties are going to. That means the prices are going to really, really drop because whatever the sellers have to sell for whatever reason for you. And same thing with apartment buildings, which is still the Rolls Royce for real estate. There's still going to be opportunities, but that's going to drop to buildings going to be less, but there's still going to be good opportunities. Like I said, seller carrybacks will be an opportunity on the commercial end, but it won't be so much on the residential end because they're going to cut a lot of the funding off. A lot of the hedge funds, advisory groups, and banks, insurance companies are going to cut stuff off in prime non-conforming realms. So it's just one of those realities that's out there. But like I said, if the rates get into the sevens, and they will, could go even to 20, 30%, 20%, like they did in the 70s. People are still going to buy and sell. So, you just got to keep your heads up and just keep looking around at everything. But like I said, for mortgage brokers, real estate, it's bad for you in some ways because it's going to cut into the DTI ratio. Now, there are still a lot of states in no doc, but they don't have like this no doc, no asset type of deals now. Some assets, but still it's going to, the state of no doc, no big deal. The DTI is going to get slammed. That's the debt to income ratio for the debt. Consumer debt's gone way up. So you're going to have a good chat. It may take longer for you when you and your mortgage broker counsel the buyer on what they need to do in building a plan out, because they're going to have to reduce their debt to get the DTI down. If you're really going to have to put the boot up the rear to make sure that they do it, and we have to drive them home, and you have to stay on them. So to make sure they can pay it down, it could take them 6 months before they're ready to buy. And as real estate agent, mortgage brokers are looking at that and start thinking about it as things shift, and all of a sudden, bam, you're in a slip hole and you're screwed. So there's a bend in the road. It's already started. Just don't be a victim of it. So if you got any questions, go to nickforecast.com. And like I said, hopefully some good positive news will come out next week. That's what we're talking a little bit. Anyways, go to nickforecast.com to if you want to go ahead and email me questions, or go to Facebook at Nick's Forecast, or look at you need some funding of different types. Go to my funding website. And the funding website is .biz. Anyways, talk to you later. Bye.